So I thought that one of the highlights of the conference call was the GE deal,
Yes.
which was the Predix deal. I happen to be a big believer that GE's digitization is for real. You've got the best balance sheet in a long time. You had $4 billion in cash. You really were talking about $5.5 billion in debt. You're ready to do a deal. Why not double down on that particular business?
Well, we are doubling down on that business with GE. That was
about with an acquisition.
Oh, with an acquisition?
Yes.
So here's the good news. With a now more focused company, with a company that generates a lot of cash, and we'll get $1.5 billion of cash from the CSC deal, $2.5 billion of cash from the software deal. We now have a war chest that, on a returns-based basis, we're not going to overpay. We can make acquisitions in a very focused way. And it's why software and ES are better with these new merged partners, because we have to focus on doing a small number of things really well. We were spread too thin, and now all the investment will go into our remaining business.
All right. Now, on the core itself, you seem to be cognizant that the storage performance was not as strong in Q3 as you'd like, and you admit that yourself. Why should we think that this next quarter is going to be better for them?
Well, first of all, I think the storage market will recover a bit as we go forward. The storage market overall has been under some pressure, and you've seen that with our competitors. But we also have two new products at the entry level of storage. What's happening in storage, there used to be the vast majority was at the high end, then mid-tier, and then entry level, and it's basically been cascading down. And we've got two new great entrants at the entry level, enterprise capability at entry level storage prices. So I think that will bolster our results.
You know, Jim mentions, of course, the idea of M&A. I mean, when you look at what this company will have in terms of cash in its balance sheet, once these deals are completed, and it's still a while away, the software deal not going to close when? Until maybe
the end of next summer.
End of next summer, and then CSC in the end of first quarter next year.
March. Yep.
March. But $12 billion conceivably you'll have on your balance sheet.
Yep.
Are you just going to keep buying back stock, or are you really going to consider doing something bigger? Or, I mean, are you just going to sell what's left of this company? Because you seem to sort of just want to get down to nothing.
Well, what we are down to is a $28 billion company. It's not exactly a peanut.
It is not. It is not. But it's not the $120 billion top-line company you had even a few years ago.
But you know what I would say? In this environment, smaller, more nimble, and faster is the right strategy.
That was a big moment for you when you came to that conclusion. I mean, we sat here and we did interviews for years where you still talked about the benefits of having the big HP together. And then you suddenly came to some moment. Why?
Well, we are, I think, at our industry does this every 10 to 15 years. Big tectonic plate shifts. Think of mainframe to client server. Think client server to web 1.0, where I had a front seat at the revolution at eBay. Now we're in another, then we had web services and mobility. We're on the cusp of another huge change with, I think, the implications as big as mainframe to client server, only happening much faster. And my view is we got to be nimble, fast, innovative in a more focused area.
Where'd you find these Micro Focus guys? I mean, there had been a lot of discussion that conceivably you'd get sold to that you would sell this business to private equity, some price tags upwards of $9 billion. Why is this the better deal?
So we ran a very robust process for these non-core software assets, and there was a lot of interest because while they are not core to the future of Hewlett Packard Enterprise, they're a great set of assets. And Micro Focus, actually, we didn't know a lot about Micro Focus, but they've done a remarkable job. They're a UK company, and what they do is they manage mature software assets well and create a long-term platform for customers. They are very good at managing growth assets like SUSE, and they have been incredible for shareholders, 39% compound annual growth rate in their stock price over the last 4 or 5 years. So they are experts at this business, and I think they're going to do a great job. And our shareholders will have a chance to ride the upside because our shareholders will own 50% of this new company. By the way, I'll be a shareholder because of my vested shares in HPE, and I'm a holder of this new company.
And one would assume, given the history with Autonomy, which was a UK-based software company, you were not the CEO. Of course, at the time, though, you were on the board when that deal, which you alleged was a fraudulent one, took place. I would assume you did a lot of due diligence on Micro Focus?
We did. We did. We did more due diligence on this potential partner than I've seen in my entire business career for exactly the reason that you described. And I have to say Micro Focus was incredibly forthcoming with their earnings statements, their accounting firm, work papers. So we feel very confident in this deal.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.